Prakash Diwan is with us. Prakash, morning. Lots to discuss today. Let's start with Dabur, actually, because, we are all cheering the rural recovery. But here comes Dabur with a not very inspiring sort of update for the second quarter. They're saying sales might fall in mid-single digits. Your view?
Good morning, Surbhi. So I think this is quite in line with what one of the brokerages had brought out a week back, I guess. Remember, we spoke about whether there's enough juice in Dabur left because of the juices category being under stress. And that's where, the beverage category is where the management has indicated there could be softness. But, the beauty about these multi-products segment FMCG plays, especially multi-geography, multi-segments in terms of rural and urban, is that something or the other will give way, but something or the other will actually take its place in terms of growth. So I think if there is a softness because of this, and remember, this doesn't contribute more than just barely to double digits. So it's something which could be an opportunity to load up these names. Festival season is the best time. We've had a very good monsoon all around. I don't see any reason. Input prices are fairly benign. These are opportunities to actually build a little bit of allocation towards FMCG, especially the larger ones. And when I say larger ones, it's beyond the ITCs of the world. So whether it's Manico, whether it's Dabur, whether it's Godrej. So I think it will be an opportunity to buy because of the softness. But there could possibly be some softness given the overall market condition.
Okay, all right. Hi, Prakash. Good morning. Good to see you as always. Well, we've got a couple of steel notes that came in today. Morgan Stanley has gone ahead. They've upgraded their estimates. The pricing estimates, they believe that spreads will improve, and also they are working with domestic pricing now at par with imported steel. So they like the steel sector, and that's why they've upgraded, and they believe it's well placed. Nomura as well has initiated coverage on two stocks, JSPL as well as JSW Steel, and they've given elevated target prices. Your view on the steel stocks?
So, good morning, Nigel. Very positive. This is on the back of non-ferrous doing well as well. Remember, the rally was kind of led by copper and aluminium and zinc, of course. But steel is now kind of coming into the party. The interesting part is if you look at data for the first half of FY25, which has just started coming out, cap goods has continued to see a lot of expansion. The kind of spending that's happening in trillions out there means that it's not something which gets over in 6 months or 3 months. You will see that follow through happen, and as we go into these 2 quarters, which are probably better than the first 2, you'll probably see steel consumption rise phenomenally. So I'm sure that the domestic demand is there to back you up. Very good headwinds from there, and the tailwinds in terms of price rationalization, given the Chinese dynamics, is also kind of going to help them. Whether you would buy an OEM or an derivative is a question. I would still believe HEG from the graphite pack is kind of looking up very smartly in terms of inventory build-up, in terms of demand. I think you'll probably get a little bit of a surprise move from there. And for the simple reason that the global setup also, everybody is wanting to demand graphite rods. So it's not something that only India is doing it, and HEG will kind of be very well poised to balance that. So I would look at something like that, but stick to non-ferrous as well. Don't ignore that, the Dalcos and Nalcos of the world. There's lots of juice left there.
Dabur, you started with juice and juice. Prakash, hi, morning. Just a quick word on, look at the market, by the way, 400-point cut, which means that right at the word go, we'll be starting below the 20-day moving average for the Nifty. So that's the Nifty. Let's look at the Nifty Bank as well. The 20-day here is 52,538. Okay, I think
I think we still need some time.
Still need some time.
We have 3 minutes more.
3 minutes more, so we'll have something coming up there as well. Just look at BSC, the stock. In the pre-open session, and maybe we could look at names like Angel One, which is of course the most traded name. BSC, nothing. I mean, 1.5% lower on BSC. Angel is down about 2.7, and the others are Motilal Oswal and IIFL Securities and MK and a few other sort of names as well. So that's the other pack to really watch out for. Prakash, any specific thoughts on BSC? I mean, lots of debate. I was reading a note from Jefferies. They say, well, they cut their earnings estimate for BSC. There are others who believe that, this would turn volumes towards BSC, and it's a big one, in a positive way, what SEBI has done in terms of having one weekly option, a weekly contract per exchange. What's your sense, BSE?
Yeah, so good morning, Prashant. So on the surface, BSE doesn't seem to be in a spot to lose much.
Yeah.
It's NSE that would be worried. And you know, as the F&O segment activity starts phasing out a lot of the smaller players, there could be a propensity to move to micro caps, which are predominantly listed on the BSE. You know, but I'm not saying, you know, those penny stocks that people like to do and start kind of having wishful, you know, trades on. It's not something which will last long. Can I build that into the BSE revenue model? The answer is not really. So what's going to help the BSE is general organic growth of demat accounts, of activity, the kind of IPOs that are coming, Prashant. I mean, I think BSE, we don't realize, but BSE benefits equally whenever, you know, there's new paper that comes into the market. And some of these exchange fees structures are such that the more activity in the IPO market has an accelerated return profile. So I would believe there will be growth. Now, whether at 3,800, 4,000, is it worth buying into it from a valuation perspective is the key question. I would believe a softer valuation will give you better risk reward. And the market is in such a condition that state that it is vulnerable to corrections. So if there is a correction, you will probably see 10, 15% come off very easily. So build it for the long term into your portfolio, but I'll be, you know, at a lower level so that at least you can be comfortable holding it for a slightly longer tenure.
So your shopping list is ready, and BSE is one of the names perhaps on it. It's a question of when to go shopping, right, when that correction comes. Prakash